Hello, this is Colin. Today I'm going to talk about some of the trending news and events that may affect your investment decisions. Let's get started. Walmart says Ozempic weight loss drugs impacting sales. This news is about how Walmart has noticed a change in food purchasing habits of people who are taking Ozempic and other weight loss drugs. Ozempic is a diabetes drug made by Novo Nordisk that also helps people lose weight by suppressing their appetite. Walmart's US chief executive John Furner said in an interview with Bloomberg that the company is seeing a slight pullback in overall basket when comparing the data of people who take Ozempic or similar drugs to those who don't. He said the pullback has been just less units, slightly less calories. This news may have implications for both Walmart and Novo Nordisk, as well as other companies in the food and drug sectors. On one hand, Walmart may face lower sales and margins in its food business, which accounts for more than half of its revenue. On the other hand, Novo Nordisk may benefit from the growing demand for its weight loss drugs, which are expected to reach 24 million users by 2035. Other food retailers and manufacturers may also need to adjust their strategies to cater to the changing consumer preferences and behaviors. For example, they may need to offer more healthy and low-calorie options or focus on other segments of the market. As an investor, I think this news is bearish for Walmart and bullish for Novo Nordisk. Walmart's stock price has already dropped by about 3% since the news came out, while Novo Nordisk's stock price has risen by about 2%. I think this trend will continue as more people adopt weight loss drugs and reduce their food consumption. Therefore, I would sell Walmart and buy Novo Nordisk. And it didn't play technique in maybe options based on May, and then safety wins and denied in ops and private equity firm, some called. According to Bloomberg, AT&T has the option to sell its stake after July 31st, 2024, but it can also start sale discussions before that date. Some of the options that AT&T is considering include a dividend recapitalization, adding a new investor, or selling the stake and exiting the venture as early as August 2024. This news may have implications for both AT&T and DirecTV, as well as other players in the pay TV industry. On one hand, AT&T may be looking to divest its stake in DirecTV to focus on its core wireless and broadband businesses and reduce its debt load. On the other hand, DirecTV may be facing challenges in retaining and attracting customers amid the rise of streaming services and cord-cutting trends. DirecTV lost about 400,000 customers in the second quarter of 2023, bringing its total subscriber count to 12.4 million. This also reduced the cash distribution that AT&T received from DirecTV from $2.7 billion in the first half of 2022 to $1.9 billion in the first half of 2023. Other pay TV providers such as Comcast and Charter Communications may also be affected by the potential sale of DirecTV, as it could create more competition or consolidation in the market. As an investor, I think this news is neutral for AT&T and negative for DirecTV. AT&T's stock price has not changed much since the news came out, while DirecTV's stock price has fallen by about 10%. And I think this reflects the uncertainty and risk involved in selling a large stake in a declining business. Therefore, I would hold AT&T and avoid DirecTV. That UAW strike update, Ford announces more layoffs. So GM puts cost at $200 million. This news is about how Ford Motor announced more layoffs, such as the ongoing United Auto Workers strike. Ford said it would lay off another 400 workers, bringing the total number of its employees affected by the strike to about 1,300. Meanwhile, GM said it has lost $200 million in the first 2 weeks of the strike. The UAW strike began on September 15th, 2023, after the union rejected a tentative agreement with the automakers that included a 20% wage increase over 4 years. The union is demanding a 40% wage increase and better benefits and working conditions. This news may have implications for both the automakers and the UAW, as well as the broader economy and society. On one hand, the automakers may face lower production sales and profits, as well as reputational damage and customer dissatisfaction due to the strike. On the other hand, the UAW may face public backlash, legal challenges, and internal divisions due to the strike. The strike may also affect the supply chain, the dealerships, and the consumers of the auto industry. Moreover, the strike may have wider impacts on the labor market, the inflation, and the political climate in the country. As an investor, I think this news is negative for Ford, GM, and Stellantis. Their stock prices have all declined by about 5% since the strike began. I think this reflects the uncertainty and cost of the strike, which could last for weeks or months. Therefore, I would sell Ford, GM, and Stellantis. And Rivian Automotive plans for $1.5 billion green senior notes offering, and then 2030 in a private offering to qualified institutional buyers. The notes will be senior unsecured obligations of Rivian that will accrue interest payable semi-annually and will mature on October 15th, 2030. The initial purchasers of the notes will have an option to purchase up to an additional $225 million in notes. The interest rate, initial conversion rate, and other terms of the notes will be determined at the pricing of the offering. The notes will be convertible into cash, shares of Rivian's Class A common stock, or a combination of both at Rivian's option. The notes will also be redeemable in whole or in part for cash at Rivian's option on or after October 20th, around 27. The notes will align with the green bond principles, which ensure that the proceeds go to green projects such as clean transportation or renewable energy. This news may have implications for Rivian as well as other companies in the electric vehicle sector. On one hand, Rivian may use the proceeds from the offering to fund its growth plans, such as expanding its production capacity, developing new products, and entering new markets. On the other hand, Rivian may also face more dilution, debt burden, and interest expense due to the offering. Rivian's competitors, such as Tesla, Lucid Group, and NIO, may also be affected by Rivian's offering, as it could increase Rivian's competitive edge or create more pressure on their valuations. As an investor, I think this news is positive for Rivian and negative for its competitors. Rivian's stock price has risen by about 3% since the news came out, while its competitors' stock prices have fallen by about 2%. I think this reflects the market's confidence in Rivian's growth potential and its ability to raise capital at attractive terms. Therefore, I would buy Rivian and sell its competitors, and then a tale of two IPOs ends in bankruptcy. This news is about how Ginkgo Bioworks announced Zimmergen's bankruptcy filing on Tuesday, ending a short-lived merger between the two biotech companies that went public in 2021. Ginkgo Bioworks and Zimmergen made public debuts in 2021 in a record year for biotech IPOs. Ginkgo went public through a $2.5 billion SPAC merger in May 2021, while Zimmergen went public with a $500 million valuation in April 2021. However, both companies faced challenges in their businesses amid rising interest rates and falling share prices. Zimmergen lost its CEO, Josh Hoffman, several months after its IPO and pivoted to drug discovery last year. Ginkgo acquired Zimmergen in October 2021. in an all-stock deal valued at $300 million, a sharp discount to Zimmergen's IPO valuation. However, Ginkgo acknowledged that Zimmergen carried significant contingent liabilities at the time of acquisition. With the bankruptcy filing, Ginkgo will once again become a bidder for Zimmergen under an agreement to offer $5 million in cash and assume $77 million in future liabilities for most of its assets. This news may have implications for both Ginkgo and Zimmergen, as well as other companies in the biotech sector. On one hand, Ginkgo may face losses and reputational damage due to its acquisition of Zimmergen and its bankruptcy filing. On the other hand, Zimmergen may lose its assets and creditors in the bankruptcy process. The bankruptcy filing may also signal the difficulties and risks involved in the biotech sector, especially for companies that rely on synthetic biology and bioengineering to create novel products and solutions. Other biotech companies such as Twist Bioscience, Amiris, and Intellia Therapeutics may also be affected by the market sentiment and investor confidence in the biotech sector. As an investor, I think this news is negative for Ginkgo and Zimmergen and neutral for other biotech companies. Ginkgo's stock price has plummeted by about 20% since the news came out, while Zimmergen's stock price has been delisted from the NYSE. I think this reflects the failure and loss of value of the merger between Ginkgo and Zimmergen. Therefore, I would avoid Ginkgo and Zimmergen. Other biotech companies' stock prices have not changed much since the news came out. I think this reflects the diversity and resilience of the biotech sector, which has many different segments and applications. Therefore, I would be selective and cautious when investing in other biotech companies. Okay, that's all. I hope you found it useful and informative. If you have any questions or feedback, please let me know. Thank you for watching. Don't forget to like and subscribe. This is Colin signing off.